It's happening right now, quietly but relentlessly. The kind of slow-motion disaster most people won't notice until it's too late. The great auto loan collapse has begun, and it's reshaping the entire car market before our eyes. Welcome back to Car Gurus, your inside source for everything happening in the automotive world. And today, I'm exposing a crisis that's already wrecking wallets, dealerships, and even manufacturers. For years, Americans have been taught that cars lose value the moment you drive them off the lot. But what we're seeing now isn't normal depreciation. This is a full-blown financial earthquake in the auto sector. Car prices that skyrocketed during the pandemic are crashing back to earth. Millions of buyers who financed overpriced vehicles at rock-bottom teaser rates are now stuck with loans at double-digit interest rates. And repossessions? They're exploding, with recovery agents working 24 hours a day to haul away vehicles from every corner of the country. The auto market is imploding like a bubble no one wanted to admit existed. Let's rewind. Between 2020 and 2022, a perfect storm hit the car world. Semiconductor shortages, supply chain chaos, a labor crunch, and huge dealer markups. New cars became scarce. Used cars, once the affordable option, became as expensive as luxury models. People were paying $10,000, $15,000, sometimes $20,000 over MSRP just to drive something off the lot. But almost no one had the cash. They financed. Lenders eager to profit handed out over $1.6 trillion in auto loans, with record numbers of 72 and 84-month terms. Subprime borrowers, people with credit scores under 600, were approved for loans they never should have gotten. Interest rates at the time were low, 3%, 4%, sometimes 5%. But today, those loans are resetting in a different world. Used car loan rates have jumped to 11% or more, and subprime borrowers are paying 15%, 18%, even 20% interest. Imagine owing $45,000 on a car now worth $28,000 with 5 more years of payments left. That's reality for millions of drivers. And when reality hits, it hits hard. Repossessions are up over 26% year over year, according to Cox Automotive. Repo lots are overflowing. Tow trucks are prowling neighborhoods at night, yanking cars out of driveways, grocery store parking lots, and even workplaces. It's not just poor households being affected, it's the middle class too. People with steady jobs and spotless payment histories are falling behind because the cost of living surged, their rates adjusted, or their hours were cut. I spoke to one repo agent in Texas who said, "I've never seen anything like it. We're pulling 8-10 cars a day." One Florida couple bought a Ford Explorer for $58,000. 2 years later, it's worth $34,000, and they still owe $47,000. They had no choice but to surrender the keys. This isn't just a personal tragedy for individual borrowers. It's a systemic problem. Dealer auctions are flooded with repossessed vehicles, and those vehicles are selling at massive losses. Used car prices are down more than 10% year over year, with certain segments like electric vehicles and full-size trucks falling even faster. Tesla, once the unstoppable EV leader, has slashed prices multiple times in 2025 just to stay competitive. Inventories that were bone dry during the pandemic are now overflowing. Dealerships are sitting on rows of unsold trucks, SUVs, and electric sedans that no one wants at current prices. Some lots are so overstocked, they're renting extra space just to store vehicles. One used car manager told me, "We overpaid for everything in 2022, and now we're bleeding." And behind all of this is the subprime auto loan market, the ticking time bomb nobody wants to talk about. These loans, often made with minimal verification during the buying frenzy, are defaulting at rates not seen since the financial crisis. Delinquencies are up over 35%, repossessions are climbing twice as fast, and lenders are starting to panic. Think of it like the 2008 housing crisis, but on four wheels. The average car loan now stretches 72 months or longer, meaning 7 years of payments on a vehicle that loses value every mile. It's unsustainable. Lenders are tightening up, dealers are desperate, and buyers are tapped out. And yet the real pain hasn't even started. When loan defaults spike, lenders repossess cars, and those cars flood the used market, pushing prices down even more. Lower prices mean even more people are underwater, creating a vicious cycle that crushes both consumers and the industry. Automakers are already scaling back production. Ford, GM, and even Tesla are slowing output. Some dealers are closing altogether. Meanwhile, lenders are retreating. Some banks have stopped offering auto loans to higher-risk borrowers entirely. That means higher down payments, stricter approvals, and more people simply unable to buy. For consumers, this creates a strange mix of opportunity and danger. On one hand, falling prices could mean huge bargains for buyers with cash. On the other, tighter credit and rising repossessions create risks we haven't seen in decades. This isn't just a blip, it's a structural shift in how cars are bought, sold, and financed. And it's not limited to the US. Global markets are also feeling the strain, from Canada to Europe to parts of Asia. EVs, once the darling of policymakers, are a prime example. Oversupply, waning subsidies, and rising battery costs are crushing resale values. Some EVs are losing half their value within 3 years. The ripple effect touches everything: insurers, auction houses, even municipalities that rely on car sales tax revenue. So what can you do to protect yourself? If you're thinking about buying, wait if you can. Prices are still falling, and Q1 or Q2 of 2026 may be the sweet spot for bargains as dealers clear inventory. If you're trying to sell, act fast. Every month you wait, your car could lose thousands more in value. If you have a loan, check your equity right now. If you're underwater, contact your lender before missing a payment. Refinancing may still be an option today that won't exist tomorrow. Knowledge is your best defense. And if you're still watching this video, you're already ahead of the curve. You're part of the small percentage of people who will see this storm coming and adjust. If you're finding this information valuable, hit that like button right now to help others discover it before they get blindsided, and subscribe to Car Gurus to stay ahead of every twist, every repo wave, and every price drop in this evolving market. We're going to keep tracking this crisis in real time, breaking down the numbers, showing you where the deals are, and warning you where the risks lie. Don't let this collapse catch you off guard. Arm yourself with the facts, and you could turn this downturn into an opportunity. The great auto loan collapse has begun. The question is, are you prepared to survive it? Click subscribe now so you don't miss the updates we're releasing over the next few weeks. They could save you thousands of dollars and a world of regret. This is Car Gurus, and this is the road ahead.